we could do intros, but we have sat down in the exact order of our pictures. Well done. This is going to be we're off to a great start. So I think some of the premise of the title of this talk is like real talk. Like, are we going to expose what we actually think about ordinals? But the funny thing is like right at the outset, the very first 2 weeks of ordinals, January, February 23, like we were all in the same group chats. Like it was all like OG Bitcoin people doing this, and so we all like them. We could probably wrap up the panel there. But
you want to drop the mic?
Yeah, that's so. But I want to like go back to like why we found ourselves in this position in the first place. I'll throw it to Beezy or Brandon over here, and just open it up. Like, what do you like about ordinals? The art conversation. Why did you even get into this in the first place?
Yeah, that's a great question. So initially what got me down the rabbit hole was simply just the opportunity for more fee revenue, not going to lie. When I first heard about the Ordinals protocol, I really just wanted to understand what this is, how does it work, should we be concerned about it? So I really just was kind of seeking more information about this protocol initially. And in doing that research, kind of discovering that this wasn't really something to be too worried about in terms of what it meant to Bitcoin security or other aspects of Bitcoin. I then became somewhat bullish on it just as a miner, looking at the potential opportunity for fee revenue, thinking about this new sort of market or vertical that could emerge on Bitcoin and looking at what NFTs and art did on Ethereum in terms of fee revenue. So that's what initially got me going down the rabbit hole. And then as I started learning about some of the projects and the cool things that people were doing from an artistic perspective, it really helped me become a little bit more ingrained into the community. And I think some of the coolest things that people are doing are really with generative art and using things like block height and hashes effectively to ultimately generate art natively on chain. And Mike, I know you have a really awesome project, so I don't want to steal your thunder on that, but that's what ultimately got me down the rabbit hole.
Yeah, Mike, Romain, are you guys in it for the art?
I mean, I'm not gonna lie. When I first heard about ordinals and sort of what it was, as a miner, obviously the fee revenue is an interesting avenue to explore. But sort of from a personal perspective, I have sold the top or sold the bottom and bought the top every time, whether or not it was pick anything. And so I was like, this was one I'm not gonna miss. And it was just such a cool opportunity to come in, very early. And then I think what I sort of discovered is sort of the financial aspect aside, and the fee revenue. What I think it's done for me, and I think it's an interesting thread, is just as a miner, as a hash provider, separate from a mining pool, how much I've learned about Bitcoin itself, UTXO management, Bitcoin script, how airdrops work, and then as both the Ordinal protocol and then sort of runes on top of that have sort of expanded. My knowledge of Bitcoin now, 15, 16, 17 months later, is like orders of magnitude more so. So I think for me, the value that I've taken away is that level of understanding and appreciation for Bitcoin, the technology, more so even than the art. I mean, the code is the art, and there's so many cool projects.
I can't agree more. I mean, I think like going into the rabbit hole is really understanding Bitcoin more and more. And it's true that as Bitcoin miner, we plug computers in the wall and they make Bitcoin. But working on these new technologies, this new innovation on Bitcoin, you understand exactly like you said, the UTXOs management and how do you inscribe, how do you work with different kind of like ways to be more efficient with building your transactions and all of these kind of things. So it was on the semantic way of things. It was very interesting to see this new evolution and this new breed of creativity, programmatic creativity. Going into Bitcoin. As a Bitcoin miner, we saw it as a way, first on the fees. It's an interesting way to get fees, but it was also interesting to see the use of the block. And all of a sudden, we were using the block to do something else than just storing transactions. And it was interesting to find out and put our hands on this new concept. And finally, yeah, for the art, to your question, I love the art. Last Bitcoin conference, I was super lucky. In the backstage, I met Waktoshi, who did the rocks. And he was explaining like the genesis of the new Ordinals and Ordinal 0 and everything, like the history of it. And I felt like passionate. And I think the artists behind the collections are just phenomenal. Far, for example, from the Taproot Wizard. And the Quantum Cats is doing an amazing job. And I think we're going to see more and more people bringing creativity, not only at the programmatic level, but also at the art level. And that's what's happening.
So let's talk fees. We're miners. We're pragmatic. We need money to keep our rigs on.
We want block 440 all the time.
Exactly. So Ordinals and Runes, broadly, have added, I think, over $500 million in fee revenue to Bitcoin in just 18 months. This is out of nowhere. This is an entirely new type of transaction demand user behavior, and it's powering our mines. Now, in the grand scheme of things, it's like a couple percent of like overall miner revenue, but that is still pretty significant. I want to get some takes just on like the new landscape of fee environment on Bitcoin. Does it mark a change in how Bitcoin fees behave and look on Bitcoin?
Sure, I'm happy to kick it off. I would say it certainly does in several ways. Back when I worked at Galaxy, we wrote a report covering the ordinal space and just kind of providing some perspective on how we were thinking about ordinals and how it would ultimately impact the fee market. And the conclusion that we kind of arrived at was that it sort of sets the floor price for fees, right? And so when fees go low, it becomes a lot cheaper for people to inscribe, to put different things on chain, and that we would anticipate seeing more of that activity increase as fees got low, and then as fees go high, you would see that activity drop off, right? And that's just simply the natural market dynamic of if you're inscribing something and ultimately if you want to sell it, you ultimately have to believe the economic value of the thing you're selling is going to cover the cost to actually put it on chain. So there's sort of this natural balancing effect, if you will, when you think about putting arbitrary data on chain that is sort of self-regulating in a really, really beautiful way. So that, I would say, is sort of the market for just general inscriptions, people just putting arbitrary data on chain. But then you also have to look at sort of the other side, which is more time-sensitive transactions or inscriptions. And I think that this is something that the art hasn't really been a big driver of, but it's more so been tokenization on Bitcoin. So that was the BRC20 craze, and with runes at the time of the halving. So what really ultimately drives fees are time-sensitive transactions, as I'm sure many of you know. And so the really extreme spikes that we saw were people rushing to ultimately mint out these assets, whether it's a token or whatever it is, because they felt that there was some sort of economic opportunity for them to ultimately sell or trade those assets.
And I mean, it's true that it brought volatility also on the fee structure. All of a sudden, you had like right now we have 2% fees from per block. Block of the halving again, 840, 37 Bitcoin as a fee, 40 total. That was like really incredible. Though I think it's for a Bitcoin miner, it's also difficult to plan what kind of like fees we can plan for in the future, which is also part of our revenues. And to what you were saying, I think high fees for us is not always good. I mean, if the L1 has too high fees, it could congestionate the network. And behind it, and that's what I love in Ordinal originally, but right now behind what's happening in Ordinal, it's also everything related to L2s. Is how do we scale Bitcoin? I mean, we need to keep L1 as it is, as powerful as it is, as secure as it is, but how do we bring more solution where we can scale the usage of Bitcoin to really get to the billions of users on Bitcoin? And it's coming now. We have L2s projects everywhere.
Yeah, the whole building is filled with layers upon layers of abstraction from Bitcoin. I'm going to put Mike on the spot. I'm going to ask you a bit to help the audience understand how the big Taproot wizard gets into a block, but I'll probably specify a bit more because I feel that the past year and a half in Bitcoin has been elucidating to differentiate between, I would say, us, who are hash producers, and the block producers, the mining pools. Historically, and I think a lot of people, even in Bitcoin, just kind of lump together Bitcoin miners. And it's probably increasingly important to distinguish between the data center operators and the software which coordinates the production of blocks. So, Mike, what's the difference between a Bitcoin miner and a pool, and why can I not just get my big Taproot wizard transaction into a block normally?
Yeah, so obviously there's a lot of meat on that bone, and I've had lots of discussions this week and a couple different panels where miners get looped and sort of rolled up into this sort of singular bucket of, oh, hey, miners are signaling for SegWit or for Taproot, or miners are censoring transactions. And ultimately, as the actual operators of mining sites running Bitmain or MicroBT or any of the other machines out there, ultimately what we are doing is basically building data centers. We are networking experts. We are power. We acquire power. We distribute power. A lot of power in a little tiny bit of space. And so the mining pools. The very few, a dozen top, I don't know, probably 90% of the hash rate is in the top 6 pools, 7 pools, off the top of my head. The pools are the ones that actually are, taking these transactions out of the mempool, ordering them, sorting them, making either the most profitable blocks or, censoring blocks, or I say censoring.
Select transactions.
Selectively including or discluding transactions. And so we are two very distinct groups. I think hopefully with Stratum v2 in the future, it sort of becomes more clear in block template creation versus the actual mining pools. But yeah, so that's sort of the distinction, is that I would be willing to bet that 90% of, maybe 90+%, I found myself in this camp, 12, 18 months ago, not understanding really what a UTXO is, or some of these fundamental things. Our miners aren't, the actual machines, they're not signaling for an upgrade. We get a bunch of hashes from an HTTP endpoint from a Foundry or a Luxor or a Brains or whoever that might be, and the machines just kind of do their own thing. Now, in terms of how do you get a 4 megabyte transaction, there's obviously consensus rules and how Bitcoin nodes choose to forward or not transactions, and it turns out 400 kilobytes is sort of the hard limit, and so that's where you end up with things like a slipstream and a marathon, allowing people to create non-standard transactions that, as long as they're under 4 megabytes, they're valid transactions, but historically have not been broadcast around the network because they're large.
And if I may, it's also about how do you design the template. That's what pools do. And when you want to inscribe one bit collection in one plane, in one block, you design your template. And in general, this is what pools do anyway. So they have the power, in a sense, in the inscription world. We are validating the block as miner, but who is really making these collections are really the pool, I guess.
Yeah, it's interesting to hear you talk about that, Mike, because you say 18 months ago you were not even familiar with some of the basic mechanisms of how Bitcoin operates. And I think this actually extends to a lot of people who, even longtime Bitcoiners who are now operating and building things and testing, doing stuff in Ordinals, post-Ordinals Bitcoin. And it makes me chuckle because you're one of the smartest people I know. And you're also the research guy, boots on the ground, doing R&D. And I feel that, if I can open this question up, I feel that the mining industry as a whole has been revealed to not be as familiar with the Bitcoin network itself. We've optimized for building data centers. And
we don't need to.
Yeah.
We don't need to. If you don't want to know how Bitcoin works, and if you think you know how Bitcoin works, I think you don't know how Bitcoin works, but we don't need to. We just plug a computer and be efficient with running a computer. It's a choice to go into it, because at the end, what I love personally in this subject, it's another way to go finding efficiency. As Bitcoin miner, we strive for finding efficiency in how we're managing our energy, how we are transforming it into computing power. And with the Ordinal, it's on the software side that you're going into this kind of. But we don't need to. It's a choice of anyone. So.
But it seems like we're kind of, our hands are being forced a little bit because we kind of need to know. I agree. Like, we haven't needed to, but we kind of do need to because it impacts our business.
I made my choice.
Yeah.
I'm on it.
Yeah, and that's why you're here, because you spent the time. Mike, Brandon, what do you guys think? Like, does the average Bitcoin miner understand how the Bitcoin network works?
Yeah, I would agree with your sentiments that the average Bitcoin miner does not. And to your point, like, they haven't had as much of a reason to focus on that, because at the end of the day, their cost of power is a bigger driver of the underlying business. And so you see a lot more time spent on understanding the energy side of the business, those dynamics. And the fact that the block subsidy still makes up 90% plus of the revenue, they haven't really had to think about the implications of things like transaction fees or transaction fee volatility or what's really driving activity on chain, right? These aren't things that, if you're a public miner, equity research analysts aren't asking you these questions about that kind of activity. And so it hasn't really been a need. But as the block subsidy dwindles down and we have to rely more on transaction fees, or transaction fees make up more of the revenue, miners will ultimately have to start to form an opinion or understand the implications of these things on their business. And I think a great example of this is when you just think about curtailment, right? And when you think about what ultimately goes into curtailment bot software and the price signals that you ultimately need to take from the energy price and looking at those intervals, but then you're also going to need to understand the price signals that are ultimately impacting hash price effectively. And so that's going to be transaction fees are going to create more volatility within that revenue. And so you're going to have to think about that. You're going to have to form an opinion. And as you say, Charlie, think about mempool TA, right? You're going to have to start to do more data analysis on on-chain activity to find edge and form an opinion about how you develop software around your mining business.
Yeah, and I think the irony of how I think in general, and I certainly am not going to say all miners, but it feels like the vast majority, we ought to have been the first people to be thinking about fees. If you look at especially a large-scale mining operation that has multiple sites, potentially multiple pools as backup pools, you're getting payouts on a per-account basis over time. So like miners might be the singularly worst positioned in an escalated fee environment because we have so many different UTXOs from all these different payouts, from all these different sub-accounts, from all these different pools. And when fees are a few bytes, a few sats per byte, then that matters maybe less. But all of a sudden, imagine you've got 10 sites and you've got backup pools. That's 20, effectively every day, 20 UTXOs of 1/20th of your daily revenue. Well, when you need to go spend that, and fees are now 70 sats a byte, that becomes extremely expensive. So it's almost ironic that we understand so little in general about how Bitcoin actually works because it has such an impactful. I think we talked about this on my back porch a few months back. That should be a question an analyst is asking a publicly traded miner: is how are you going to manage? What's your UTXO management strategy? Are you consolidating? Are you consolidating overnight when fees tend to be a little bit lower? And so the whole dynamic of fees, particularly in how they relate to miners, both from a revenue but also from a cost as we consolidate and try to actually make use of that Bitcoin. Sometimes maybe we just all send it to a centralized exchange, and sort of that becomes the problem of a Coinbase Prime or a whomever. But ultimately, there will be a time when miners are mining to cold storage directly, and now you have this sort of UTXO management problem that we hear about, but no one really understands. And that's one of the things that Ordinals have brought to me is a much more of a deeper understanding on that concept.
And also, I think we can say a few words about Marathon. I think Marathon, as a Bitcoin miner, puts this kind of activity on the map. All of a sudden, it became something. They understood, as we understood, I think, or we understand, that in the future, we will need to find more fees. The subsidy of the block is going to be of the fees from the network, but if we can find ways to make more fees, it makes sense. And it's a long shot. It's a long term. When you again, go to the rabbit hole, it takes time to understand, and you need to build product, you need to understand how it works, and you will build a better product after, and you understand better, you're more efficient in the way you manage your transaction, your UTXOs, whatever. It's a process, it's a long term. So you can, the sooner you start, I think the best it is in that field, but again, that's long shot. Compare it with plugging a miner in the wall. It's a no-brainer. You plug a miner in the wall, it makes Bitcoin for sure.
It's really interesting because we hit upon what I think are three kind of brand new ideas to the mining space, and it's downstream of Ordinals. Like you might call it fee-based curtailment. You might say disclosing UTXO set as part of the audit or disclosure process. Like these are very interesting, and kind of because Casey had this goofy idea to put non-arbitrary JPEGs on chain. Do we see the rise of the degen analysts at the C-suite at some of these companies? How important is it? Do you think for the kind of higher decision-making structures at these mining companies to be plugged in to the new type of user on Bitcoin? Do you think it's important? Do you think it's possible? I don't know. Open question here.
I don't know. I'm not too sure. I mean, I'm not in the head of the other executive in the mining companies. But again, I think you have to look at it. You need to look at the subject. I mean, it's the future of what we do. If you just don't want to be just running computers, I think there is lots of value to find into developing solutions on top of Bitcoin.
I think it depends on your business model. I think for a miner, like a public miner like Marathon, it makes a lot of sense because you have your own pool business. And I think the biggest opportunity for Ordinals in mining, when you just think about opportunity to make money, is services that you can provide as a pool operator. There's some interesting things that you can do there. If you're just a regular miner, it probably matters a little bit less. But what it could ultimately impact is your underwriting, right? So when you're thinking about making certain CapEx decisions, whether it be upgrading your fleet, buying ASICs, transaction fees are certainly a part of that calculus. It's very, very difficult to forecast transaction fees, right? And if you look at the data, we've seen from runes and a lot of this activity, it's very spiky. So you see periods of extreme volatility and high fees, and then it completely drops off. It's really hard to figure out like when the next fee spike is going to be and what's it going to be from. But at some point in time, miners are going to have to make or ultimately take a view on where the fee market is going to go and start to factor that into how they think about certain CapEx decisions. I think it's probably still too early before you see anyone at the C-suite level. But over time, it is something they're going to have to think about. And it's not just Ordinals. It's really any usage of Blockspace, whether it be from L2s, whether it be from Lightning. As there's more utility and more people using Bitcoin, spending Bitcoin, you're going to have to think about these things. And each of these uses have different profiles in terms of their needs or like their sensitivity with respect to timing or their need for using Blockspace.
Yeah, man, I think as you plan business, I mean Brandon's point about the fee rate is particularly in a curtailment model. If you're talking about a 3% fees that happen to run at 25% because there's a 3-week window of a couple of cool Ordinals projects. Well, 20% is the difference between 4-cent power and 5-cent power, basically. So if you're curtailing because you think you're sort of modeling zero fees or 5% fees, and they're at 25%, well, you've given up a ton of revenue, and so I think it's going to be important, like Brandon said, to understand. Obviously, maybe prediction is a little bit overstating, but at least understanding sort of the trends of what projects might be coming, what layer 2 might be launching, what what those things are and be able to understand that a little bit better than just sort of blindly choosing a 2% or 5% or 8%. Pick your number fee rate for your modeling as you plan your business.
If I could throw one more thing out there too,
Go back.
Is what this really does impact as well is hash rate derivatives. So when you think about other hedging instruments out there and these new products, you now also have to take a view to an extent on transaction fees and what you think that that's going to look like as well. And it also presents opportunities for people to trade around that too. I think volatility is good. I think more volatility, it helps make a market. It helps bring more people to the table, and that also opens up a lot of interesting opportunities and doors for traders and miners alike as well.
We got a minute and a half, and the burning question that a lot of folks have, and feel free to give a non-answer, is that of what the wizards over there are trying to get us all to make decisions on, which is a potential soft fork, opcat, or other covenant opcodes. What do you think about this? You don't even have to come out and say yes or no. I'm just like, what do you think? Where would you describe the minor understanding and discussion is on this? We got 1 minute if anyone wants to take the bullet.
I would say why not? I mean, it's innovation. We need to do it right. It's being done at the speed of Bitcoin, so it's slow. It's still a modification that needs to happen. Is it going to take 6 months, 1 year, 1 year and a half? We'll see. I think it's interesting. It's going to allow us to do more on Bitcoin. It was originally in Bitcoin. I mean, Satoshi removed it at the last minute. So I think it's gonna be interesting. And for miners, are they going to come to it? Are they going to vote for it? I don't know. I would say why not? I mean, it's true that the subject of Ordinals is dividing a little bit the industry. You really have people for and people against. But on my side, I think it's a good evolution, and I think they will do it right like before.
What do you think, Mike?
Yeah, but I think 2 quick points. I think anytime there's a change that potentially can make Bitcoin a less good money, I've said this a bunch of times, I think you have to ask the hard questions, but it was also there in the beginning. Satoshi had it there in the beginning, and so I'm sort of comfortable with it, and I think it unlocks lots of cool things.
Yeah, I would agree with that. I think just thinking about it purely from a miner's perspective, the opportunity to bring more expressivity to Bitcoin means more ways to spend Bitcoin, which creates more opportunities for fee revenue, which I think most miners would like to see. And I would also add that, what else would I say? I mean, personally, I'm pretty pro opcat. I would like to see it. I think Ordinals proved that people want more ways to spend their Bitcoin. People want to be able to do more things with their Bitcoin. I think that that's what Ordinals ultimately demonstrated.
And if it makes my quantum cats go up, then so be it. So thank you all for joining.
Thank you.
Romain, Brandon, Mike.
Next year, we are bringing the Bitcoin conference to the American West, Las Vegas. The brightest minds in the world will converge to deliver Bitcoin history. Buy your tickets now at b.tc/conference/2025.